Well, you got to kind of keep as a backdrop. You got to keep in mind the magnitude of the facility you're talking about. I mean, it's like 230,000 people living in dorms on the Apple campus
Yep.
working for Apple. So when they decide to revolt, that's like a small city that
Yep.
now no longer works for the Apple factory. So although I agree with you generally, that it's a little different than saying I have this 2,000 person warehouse in the middle of nowhere that people are protesting, and you might not produce 3% of your product.
Right.
I mean, that factory I think produces like 60% of their iPhones or something crazy like that.
So, first on our list, talk about the news that we have going on this week or economic events or anything else that's come out. So, I'm going to start with spy news. I've got nothing. Nada. Zip. Zero. Nothing of importance. I covered this morning in my Instagram reel, TikTok, YouTube short, whole nine, uh, the potential for a 50 versus 75 basis point hike and what that would do to the market. I think that there is an unbelievable amount of pressure on the Fed to do a 50 basis point hike and not a 75. So we're going to see. If we do a 50, I think the market's going to absolutely fly. If we do a 75 and he just keeps his foot on the gas, maybe we fall. I'm really not sure. I'm not sure what the market wants and what the market's priced in. But we will find out on December 14th. December 14th, I believe. That'll be fun. All right. In regards to news this week or economic events this week, today 9:45 S&P U.S. Services PMI final, 10 a.m. ISM Services Index, and factory orders. All right. Tuesday trade deficit 8:30 a.m. Wednesday 8:30 productivity revision, unit labor costs 3 p.m. consumer credits. Thursday initial jobless claims, continuing jobless claims. That looks like that's going to be the big economic catalyst for this week in regards to volatility or pending or imminent volatility. Okay. Friday, 8:30, producer price index final demand. And then 10 a.m., there's three events. UMich Consumer Sentiment Index, UMich 5-year inflation expectations, wholesale inventories revision, and at 12 o'clock, we have real household wealth, real domestic debt growth. And that is all that we have for this week. In regards to the news, I do not see anything major. I do see a drawdown in Tesla, so let's see if there's any Tesla news. Tesla shares are trading lower following reports suggesting the company plans to cut production at its Shanghai factory due to slow demand. I believe I heard something about Apple this morning also wanting to move out of China. I don't know how true that is. Let me see if I can find it. There it
Well,
is.
Tim Cook already is advertising back again on Twitter.
Uh-oh. Okay. That's spicy. So, we've got... Ooh, give me 1 second, guys.
Now I gotta be related to all my Tesla news.
Yep, I will go over it and cover it in 1 second. I'll read this article that they've got. Okay. So Apple said to be making plans to shift some production of China. Wait, I already read the Tesla one. Sorry, the Apple article. Market chatter. Apple said to be making plans to shift some production out of China. Report from the Wall Street Journal. Apple's reportedly taking steps to move some of its production out of China in wake of protests at manufacturing facilities. Wow. So Apple will keep its factories in China as long as the people are not trying to fight their communist dictators. Huh. But now that the people are rising against the Chinese government, Apple's like, nope, this is too dangerous. No, we're going to move our shit out.
Well, you got to kind of keep as a backdrop. You got to keep in mind the magnitude of the facility you're talking about. I mean, it's like 230,000 people living in dorms on the Apple campus
Yep.
working for Apple. So when they decide to revolt, that's like a small city that
Yep.
now no longer works for the Apple factory. So although I agree with you generally, that it's a little different than saying I have this 2,000 person warehouse in the middle of nowhere that people are protesting, and you might not produce 3% of your product.
Right.
I mean, that factory I think produces like 60% of their iPhones or something crazy like that.
Well, that's nuts, and I understand what you're saying completely. I just think the politics behind it are crap.
Oh, Apple's politics are crap. Yeah, all kinds of bad stuff.
All kinds of bad stuff. When you got the you got some of the most capital in the market, it's just nuts. You're gonna get onto all kinds of bad stuff. Excuse me, the proper phrase is market cap. Okay. Alright, so following that, I'd like to go over a little bit about what I'm looking at this week in regards to my favorite two big boys, SPXL and TQQ, because I'm going to be cycling both of them this week, which I am very excited about. Very excited about. I'm trying to pick up some more shares at SPXL. I'm trying to get more covered calls out, as well as just get my covered puts in, and hopefully they will acquire shares. Most likely with my patience and the time that I give those covered puts, they'll do well, and I'll want to close them. So I'm just going to have to buy shares outright, which is fine. I'm okay with doing that. It's not a problem. But in regards to the two, I'll give a very simple rundown of what I'm looking at. And I know, Craig, you and I were talking this morning about this. So if you're looking at my stream, this will help tremendously. Hopefully.
Zooming in here.
All right. So this week, it's very, very simple. I don't know. Oh, I have this from the... why do I... Okay. So, very simple here. Here's our range. We've got our high, 24.19. Rejected it perfectly. SPY, however, did break through. I'm going to look at QQQ in a second. But TQQ is quite compressed as of right now. So it's not really seeing the movement of the non-leveraged ETFs. Now, percentage-wise, it's blowing out the non-leveraged ETFs. But numerically, and its price, it's not. And its resistance that we're looking at, that SPY broke through, that I'll show in a second, it's TQQ is not. Now, we'll go over SPXL, and it's a slightly different chart. But for me, for TQQ, it's very simple. I've got some minor supports here, major support here, got a minor support here. So I'm going to be looking to deploy covered puts anywhere below really this range right here. I've got there's a support here. If I draw, that's probably where that line was. Where that line was. Let's do this. So if I'm going to create an alert, at or below. There we go. So there's a support right there. We come down here, I'll get some more covered puts. We break down lower. Here's another support right here for another leg. And then we got another leg down here. And then we've got all this free real estate right down here until that previous resistance turning to support here. Create an alert right there. At or below. Kaboom. Okay. So, and then we've got resistances up here, right? So we came up here, consolidated in that range. I can put one right there. There's a resistance right here. And supports can turn into resistances and vice versa. But, so, we can come down here. I can get covered puts. We can run up here, and I can get covered calls. Right? Or here, another leg of covered calls. Or here, another and larger leg of covered calls. Because this is a major resistance right here. So, something to think about, right? The stronger the resistance, the heavier I'm going to make my covered calls. Doesn't mean I'm going to take on more risk in regards to my strike price. I'll allocate more contracts to it, which means, yes, I'm sizing up my position, which technically is more risk. Yes, absolutely. But I'm not tightening my strike prices per se. I'm still $3-4 out of money. A couple weeks out. right? So I'm trying not to take a whole lot more risk, but I do want a larger position at more significant resistances and a larger covered put position at more significant supports. And then once we start to get into this support range down here in the 2021 range, I'm going to start getting more at the money or in the money covered puts to bank a lot of that premium. And if I get exercised, great. I want the shares there. If I don't get exercised and we go back up to the previous resistance up here, it's a difference between getting credited for a covered put that's way out of the money and I get 30 cents and a covered put that's 2 weeks out that's in the money that I get $1.50. So $150 versus $30. 5x difference. We like that. Like that a lot. Now, that 5x difference is not attached to a 100 contract, 20 contract position because I don't want to buy that many shares. It could be a 10 or 20 contract position for me, 20 up to, that are thereabouts right now. So it's 10 to 20 contracts in the money, buy 1,000, 2,000 shares. Could be one in the money contract to buy 100 shares. Depends on what I'm doing with the account. And right now for the accounts, I've got a new company who just threw in $250,000 that I'm helping out and working with. And that account is going to be our cash flow model. So with the cash flow model, what I'm doing is I'm selling covered puts against all the cash. Well, it's not all the cash, about 70% of the cash available. And I've been doing that for that account opened in the middle of October. So I've completed 48 days, something like that. And I haven't lost a covered put. So I haven't bought one back for a loss. You guys would see it in the alerts. So, and I've got all the transactions for it. What that means is I'm buying those covered puts back for profit every time. And what that's creating about 4%. First 15 days I equated to about 4.5 or 4 point something percent. No, I'm sorry. It was 5.02%. Which not bad in a month. And what I'm doing is now that accounts at $250,000, $250K, that account at that 4%, 5% level is going to be making at least 10 G's in cash flow. So I can take 10 G's and I can do 5 in the money puts, or I can buy 500 shares. Either or. I have options because of that cash flow that's coming in. So that's TQQ. Resistance is up here, supports down here, supports for covered puts. So supports are when I close my covered calls, buy them back, and then I deploy my covered puts. Resistances is when I deploy my covered calls and I buy back my covered puts. So if we go up, money's made. If we go down, money's made. If we go sideways, money's made on both sides. That's how we do it. Now, let's go over SPXL real quick. Should have started this a little earlier. Market's about to open in a few minutes. So, like SPY, SPXL broke out of this resistance. And for those who don't know, SPXL is the triple leverage of SPY. One of my favorite ETFs alive in existence. Available to the public. So, resistance. This was a resistance. It's now support. We've got a resistance right here. We've got another support all the way down here. So, since we're as high as we are, I am definitely going to be more focused on, especially in this range, getting some covered calls. And then in this range, getting a lot of covered puts once we draw back down. A lot of covered puts. But right now, it's difficult for me to deploy covered puts to any serious magnitude. I've got, I believe, 68 strike covered puts. So if I do get exercised on those 68s, I'd be buying them right at the support right here, which I'm completely fine with. And those are for short-term trade. Share trade. Completely fine buying them 100 shares at 68. 100 share increments at 68. And then what's going to be really exciting is we've got a couple of new businesses, entities, solidified businesses that are going to be coming in soon. So I will have different sized accounts that I can go over. And if you guys have businesses, you let me know. you let me know. But the average for the cash flow running the covered puts first, buying shares second, or if I just ran the covered puts for cash flow, I've got the compounding interest calculator. I've got my no back tests for this. This is pure account data from TD Ameritrade, trajectory, everything. Pure transparent data. Transactions, whole 9 yards. Account balance from start to finish, or start to current to present day, and that's showing 3.5 to 5% a month in cash flow gross. So whatever the business is getting taxed at, you take that out, and the compounding interest calculator or compounding growth calculator, for the pitch deck for this model, I'm taking out 37% in taxes to be very aggressive, and there's not a whole lot of companies that should be getting taxed at 37%, truthfully. If you are, you probably need a new accountant because you're not writing enough shit off.
That's crazy.
Yeah, but I ran it at 37%, and we're doing over 30% a year net in cash flow. And that's without buying any shares. That's just running the cover puts all year. So that's the data I've got. All of those data points, the compounding growth calculator that was built, is based on live accounts that we're currently doing this with. So we've got supports and resistances for TQQ and SPXL for the wheel and the shares. So that should conclude everything for this morning. Market's about to open. So let me get a stream.
5 seconds.